this morning, some 13 million Americans are waking up in a home that is worth less than they owe. It's what many call being underwater, and economists say since the housing bubble burst nearly 6 years ago, more than 4 million people have lost their homes, while another 3.5 million are either in the process of foreclosure or at risk of it due to delinquent mortgage payments. The Obama administration has tried several initiatives to help the nation's homeowners, but my next guest says it's time for a, quote, bolder strategy. Joining me right now from Portland, Oregon is Democratic Senator Jeff Merkley. Senator, good to see you.
Good to see you, Fredricka.
All right, so take me through this bolder strategy.
Well, basically, of those 13 million folks, only 170,000 who are underwater have been able to refinance. And so we have millions of families that not only haven't been able to use the current program, the HARP program, but millions more who don't even qualify because they don't have a Fannie or Freddie loan. So we need to make refinancing available to people who are current on their loan, they're good credit risk, but they can't get refinanced under the current mortgage rules.
So how do you go about making that change? Because that is kind of the obstacle that so many face. They need some help. They're anticipating that it's going to be a long road for them, you know, unless there's some kind of reprieve. But then their banks say, no, not until you default by so many months.
We take a page out of the Franklin Roosevelt program called the Homeownership Loan Corporation. And basically, you set up a trust. You issue mortgages at 2% above the cost of money. That margin pays for the defaults that occur, and the defaults would be modest because these are families who have been making their payments through good times and bad times. Mm-hmm. And so they would benefit enormously from that lower payment. That makes them much lower risk for default. And in addition, they'd have a lot more spending money, which is good for everything else that goes on in the economy. So it's a win at every level. And the great thing is that the money raised for the mortgages comes from private bondholders. So private money creates the capital to invest, and it returns a profit to the taxpayer.
So you spoke with some leading economists when formulating this plan, and what did they have to say was actually the biggest barrier to trying to stop foreclosures?
Well, the biggest barrier right now is that the only program available for underwater families is to go through the HARP program. The HARP program essentially is set up so you have to go to your current mortgage holder who doesn't want to refinance your loan because if you're making payments at a high interest rate, they want to keep you tied into that high interest rate. So it's set up in a way that basically is at the will of the mortgage company rather than being something set up to basically address the needs of the homeowner. And so that's why by changing this and making people eligible who do not have Fannie and Freddie mortgages, and those who do have Fannie Freddie mortgages, they'd be eligible as well, and it would create a competition among mortgage originators so that the family is not at the mercy of the bank, if you will.
All right, Senator Jeff Merkley, thanks so much for your time and perspective from Portland, Oregon this morning.
You're welcome.